You must be aware of the term inflation, as it's been in the news a lot lately. But what does it actually mean? And why should you be concerned about your savings and investments? This is exactly going to be our focus as we discover the causes of impact and a way to protect your savings against inflation in this video. First, before getting right into the video, let me introduce myself a bit. My name's Jolena. I'm part of the Customer Relations and Educational team here at AlgosOne. At AlgosOne, our aim is to make your investing life a little bit easier by providing you with a platform that automates your investments for you through our AI technology. This way, your investment portfolio can be safe from inflation. So, let's get right into the video. In simple words, inflation is the gradual increase in the prices of goods caused by the devaluation of money. For example, if you used to buy groceries for a month for under $200 last year, it would cost more now, because within a year the dollar has devalued a little. As of now, the current inflation rate of the dollar is 3%, which means that if you bought an apple for $1 last year, it should cost around $1.03 this year. The primary reason for inflation is the increased circulation of money around for goods and services, which causes the prices to go up. It's basic supply and demand logic. When the supply of money is abundant, everything that you use money for will have a higher demand, but a limited supply, hence getting more expensive. So what actually causes inflation? Well, there's a few main reasons for it. Firstly, there's demand pull inflation. This happens when there's too much demand for some goods. One example of this would be seasonal shopping during holidays such as Christmas. Everyone's looking for the hottest toys and Christmas decorations, but the supply is limited, causing the prices to naturally go up. Next, we have cost push inflation. This is directly related to the rising cost of producing the goods, which is usually related to back-end expenses like raw materials and wages. This is truer in Asian regions because raw materials like rice and wheat are subsidised, or the prices are controlled by the government. Lastly, monetary inflation comes into play when there's too much money circulating in the economy. This is exactly what's put so many countries into hyperinflation. In this type of inflation, a country prints more money than is required to stimulate the economy. Still, in turn, this creates a situation where the supply of money surpasses the demands for goods and services in the economy, causing the prices to rise rapidly. It directly affects the purchasing power of individuals and undermines economic stability. We've provided enough examples of how inflation affects the prices of the goods that you're buying. But what is the actual impact on your savings and investments? In short, inflation decreases the value of your saved money. For example, if you saved around $1,000 and the inflation rate increased by 5%, the purchasing power of that amount is now only $950. Your savings just lost 5% of their value while sitting in your bank account. This even applies to your savings account. According to Business Insider, the average savings account interest in the US is around 0.46% per year. And if we take a look at the rate of inflation over the last 3 years, Investopedia clearly shows that it was 7% in 2021, 6.5% in 2022, and 3.4% in 2023. This means that if you opened a savings account in 2020, your money has devalued by nearly 12% as of today. Now, investments are considered inflation-proof, but the reality is a little different. The most common investment is buying a property and renting it out. However, CEIC data shows that the house price growth rate averages around 5.5%, and with rising inflation and property tax, this shows very little promise compared to other new investment options. Yes, there are other investment options, and the one option we'll talk about now is digital gold. You guessed it right, it's Bitcoin. But Bitcoin is just one type of cryptocurrency. There are more ways that you can invest and keep your money inflation-proof. But how can you, someone who's not an expert trader, trade or invest in crypto? Well, we've got the solution for you. Here is where AlgosOne comes into play. AlgosOne is an AI trading bot that can execute successful trades for you and churn out profits from your investments. You can start easily with a $300 deposit, and you can even go for more, because AlgosOne provides you with a number of trades per day based on your deposit amount. The list is visible on your screen, so you can pause the video and check it out. I would suggest starting with $300 and investing more if you're successful with it. Boasting an immense 80% success rate, AlgosOne has the edge over any other trader, because it's always active and checking data in real time for any sort of winning trade. Now, Combine the immense power of being 24/7 on the hunt for successful trade with GPT-enabled AI processing power that has studied nearly all types of trading strategies, and you get nearly a perfect chance at scoring profits with this bot. In short, if I had to summarize everything that we've discussed so far in this video, it's that inflation can erode the value of your savings, and traditional investments have become outdated and are lagging behind the increasing inflation rates. Therefore, it's time to move to new types of investments and leverage a tool like AlgosOne to help you succeed.
The AI revolution is here. Don't miss out. Join now.